Hello and welcome to another update video about VeChain. So VeChain is one that I wanted to cover. We talked about it already today in the live stream. My view is that VeChain completed, obviously it's basically it's wave 1 to the upside in 5 waves. I did highlight to you already, when was it, last week I think, that it had reached basically the minimum targets that you would expect here for the 5th wave. It could of course go higher, but I warned you that the 3.3 cent level would be a very, very important resistance, a hard ceiling, you could say, because we bounced off that level several times, and in the end, it did not make it above it. Why is the 3.3 cent level so important? Because it is based on the larger VeChain cycle. It is the 88.7% Fibonacci retracement level, okay? So anyway, then I gave you the trend line and highlighted to you if we drop below that trend line, it would be an additional indication that the move to the upside is over and that we have to prepare for this wave 2 correction, which I think is currently playing out. Now, we already discussed it in the live stream today, if I zoom in a little bit, that we could now be heading here in this A wave of the wave 2. And experience tells us that we often see a reaction of an A wave within a wave 2 around the 38.2 Fibonacci retracement and the 50% retracement, in this case between 2.59 cents and 2.389. I would always double check that with your own exchange. Yeah, it could be that prices differ from exchange to exchange. How do we measure that? We just measure the Fibs from the move to the upside here, the entire move up, and then we get the Fibs, and in this case, this is the area where we saw in the past many cryptos react to, typically in a wave 2, and that's generally a key target for an A wave in a wave 2. Yeah, because the wave 2 eventually normally gets into the region between the 50 and the 78.6 retracement, but the A wave typically reacts then to these two levels. More often than not, I would say to the 38.2 retracement. That's currently what could be playing out. I think we may get here a 3-wave move in the A wave, A, B, C in itself. Then we could actually see quite a strong B wave, and we would then head down in a C wave. Very interesting is that you could add here a trend channel, and that might give you a clue when this C wave will finish. And we have strong confluence here at 2.59 cents. Why is that? Because if it comes down now, it may really hit the channel support and an area close to the 38.2 retracement and then reverse in a B wave. In addition to that, it is this parallel trend channel which is running there as well. And in addition to that, if I'm taking the length of the A wave here, go to the high of the B wave, then we have a very, very strong confluence, because the 1-to-1 ratio, a very typical target for a C wave, is running exactly at the 2.59 cent level. So there will be strong support around that area, okay? Also, it's the area of the previous high here of the B wave. So I would speculate that we see some kind of a reversal there, even if it's only temporary. So it might be worth adding a little bit here, but that's entirely up to you, no financial advice. Overall, I think this overall wave 2 correction should take a little while, because you can see that the wave 1 started end of December. Well, basically it took 1.5 months, a little bit longer. Well, no, 1.5 months, pretty much. And typically, I would expect at least the wave 2 to take a month here at least. So that would take us here probably into the end of March, maybe even longer. These are the time zones, the Fib time zones. Sort of middle of April would be, you could say, the 100% extension. So that wave 2 and wave 1 take exactly the same length. But we don't need to get the same length, but it would, you can't expect that a wave 2 corrects a move which took over, that took 1.5 months, actually a little bit longer, that's going to be corrected time-wise and in depth by, within a week or two. So I would speculate here for a longer correction, probably will take a few weeks, maybe even a month or two. And, well, 2 months might be a bit long, but we'll see. And that we see a reaction to that orange support area. It is orange because it is generally higher risk. We now use this traffic light system. So orange is a higher risk, I would say, because it's just the A wave in a wave 2. and we don't, we don't at this stage have a very clear visibility of the structure. Yeah, it's at the moment looking like a 3-wave move, but I would still keep that orange just to highlight that, let's call it the higher probability entry point would be here. But still, you can expect quite a bit of a rally from here possibly, because if the A wave is really running only in 3 waves, the B wave can possibly even overshoot. I'm going to observe that very closely for you. I will let you know. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.